deals in Vietnam. Before we start, can I just do a quick sound check? If you can hear me, could you let me know? The sound okay? Yes, thank you, Mr. Perovsky. Okay, so my name is Van Lee and I am the moderator for today's webinar, the third of the Investing in Vietnam webinar series brought to you by KPMG Vietnam. KPMG has been in Vietnam since 1994 and is one of the largest professional services firms in the country, with offices in Ho Chi Minh City, Hanoi, and Da Nang. Today, we are proud to have with us Mr. John Ditty, Managing Partner and Advisory for KPMG Vietnam and Cambodia. Welcome, John.
Good afternoon, and thank you for inviting me to be here today.
So John will present today about the topic of deals in Vietnam. Before we begin, I just want to go over a couple of housekeeping issues. First, as you can see, we have an informative webinar planned for you full of key topics, which include a macroeconomic overview of Vietnam, doing a deal in Vietnam, what sectors and why, getting a deal done, key considerations for foreign investors. Second, we have set aside about 20 minutes for question and answer session. If you have a question, please submit the questions in the chat window anytime during the presentation, and don't forget to hit send. I will compile the questions and submit them to the speaker in the last 20 minutes of the webinar as time permits. At this point, it is my pleasure to introduce our speaker for today, John Ditty, who is Managing Partner and Advisory for KPMG Vietnam and Cambodia. John has been living and working in Vietnam since 1993. He currently leads KPMG's deal advisory business in Vietnam and Cambodia. During his time in Vietnam, John has advised on more than 200 transactions and has a great understanding of what works and why. Thank you to John for joining us today, and without further delay, I will turn the floor over to Mr. John Ditty.
Thank you very much. And to all of you who are on, thank you for joining our session. Over the next 30 or 40 minutes, I'm going to talk a little bit about doing deals in Vietnam. And I appreciate that some of the people listening may have great experience in Vietnam and in doing deals. Some of you may be just starting to develop an interest in Vietnam. So for those of you with extensive and in-depth knowledge, I apologize if I cover some things you already know. But I have developed this presentation such that I believe it will be informative to a fairly broad audience. As Van said, what I'm going to be covering this afternoon is just a few minutes around the macroeconomic overview, where Vietnam has been, where it is, and where it's headed, because that will obviously inform the areas of greatest interest to foreign and domestic investors, and point towards the second part of what I'll be talking about, which is what sectors and why. And then I'll touch a little bit on getting a deal done in Vietnam, because there are some unique characteristics. There are different types of issues that arise depending on whether you are looking to invest in the private sector or the state sector. There are different regulatory considerations, obviously, and Vietnam is still an emerging and developing market, so there are other considerations that flow from that. So let me talk a little bit about the macroeconomic setting. Vietnam continues to grow. Our GDP is expected to grow at over 6% per annum for the next 8 years, and that makes us one of the fastest growing economies in the region. As you can see from the table on the screen, in 2016 we had just over 6% GDP growth, and although there was a slight blip in Q1 of this year, the GDP forecast for the next several years has us growing solidly at just over 6%. And that puts us right at the top of the ASEAN growth market. And the only countries that are really expected to exceed Vietnam's GDP growth over the next several years are the smaller and even more emerging markets of ASEAN, being Myanmar, Cambodia and Laos. That also follows on the back of virtually 20 years of 5 to 6% growth. So over the last 20 years, we have been, with the exception of China, one of the fastest growing economies in Asia, and we expect to maintain very strong growth in the years ahead. All good for people looking to invest in that growth story. Sitting alongside our economic growth, we have now got a period of relative stability at a macroeconomic level. We did a number of years ago go through some very high periods of inflation. If we get back to 2011, 2012, we had substantial inflation. We had very high domestic interest rates, and the government did take steps to rein back inflation, but still did that while preserving growth. And again, as you'll see, we have been operating at very solid single-digit inflationary numbers for the last few years, and that's expected to continue for the near term. So the government has moved towards a policy setting that facilitates continued strong growth, but which hopefully takes away some of the potential vagaries of an emerging market where you get significant currency movements, interest rate movements or inflation. And again, if you look at the table on the right-hand side of the page, you can see that the Vietnam dong has, on average, drifted maybe 2 to 3% a year. And it's done that consistently for a number of years. There are small blips along the way, but we have not experienced the currency volatility that other markets in the ASEAN region, most recently perhaps Malaysia, but also Thailand, the Philippines. We have had a relatively stable currency for a good number of years. Something else that has been particularly pleasing is Vietnam's export performance. And as I'll talk about a little bit later in this dialogue that we're having, the growth in Vietnam is not just a domestic growth story. It's around Vietnam as part of a global or a regional supply chain. And we've had very strong growth in both in our trade numbers over the years. And while the United States and China continue to be the main source of our exports and trade activity, the trading activities with South Korea, with Japan, with the European Union, and also intra-ASEAN trade has increased significantly. Vietnam has also been an active participant in free trade discussions. We've recently concluded trade agreements with Korea. We've got trade agreements in place with the European Union. We were going to be one of the larger net beneficiaries of the TPP, and although it now looks like the TPP may need to be reset or renegotiated, there's no doubt that Vietnam will, for the foreseeable future, continue to participate in and be a strong beneficiary of free trade agreements. Just touching on some of the areas where we have seen a lot of activity, as you can see that from an export point of view, telephones and their parts has been a very significant driver of our export growth. Samsung has invested billions of dollars in Vietnam over the last 10 years in terms of their mobile devices and the manufacturing facilities where they produce those. And not only has that been great from an export point of view and from an inflow of foreign capital, but over time we've seen the start of local supply chain organisations. We've seen Vietnamese companies that supply components, that supply plastic, that supply packaging to those export-orientated industries also growing and thriving. And in fact, one of the areas where KPMG has done a lot of it from an M&A point of view has been around the packaging and plastic sectors, because it is A, supporting the domestic consumer story, but B, supporting export growth. You'll also see that textiles remains a major export for Vietnam. When I first arrived here in the early to mid 1990s, already Vietnam was producing branded goods for Adidas, for Nike, and that continues to be a strong source of export revenue and a major source of employment for the country. And so we've got a good blend. One of the interesting shifts over the year has been aquaculture and wooden products have become a little bit less important. If we had have looked at this slide perhaps 6, 7, 8 years ago, we would have seen seafood and wood products much further up the list. And interestingly enough, coffee is also on there. And Vietnam, the commodity trade for Vietnam is very important. We are the world's second largest exporter of coffee. We are the world's largest exporter of pepper. And we are in the top 2 or 3 exporters of cashew nuts and rice as well. So, commodity exports, agricultural exports are very important. And what we've seen again in recent times is a move towards more value-added exports in that area. We're not just bagging it and shipping it. We're now starting to add value in country, and that creates further employment and further wealth within Vietnam. The real story, or one of the real stories, has been around our consumer society. We have a relatively young population. Certainly it's young compared to me. I've actually lived in Vietnam for longer than about 60% of the population, as it happens. But we have a very young population. We have increased urbanisation, people moving from rural settings towards the city. So we've got coming together of a strong demographic story, increased urbanisation, an emerging middle class economy, and all of that is feeding consumer opportunities. The next slide, which you can see there, is we've seen very strong growth in disposable income. It will have gone from 2010 through to 2018. It would have more than doubled. And one area where, just as an example, we've seen particularly strong growth is around healthcare spending as a percentage of GDP, but also in absolute terms. So the demographic story of people who were born after the end of the war, coming through education, getting university education, getting degrees, earning more money, putting that money into their children, putting that money into their health, putting that money into real estate is really what's been driving the opportunities. The next slide, FDI, is still obviously a very, very important area. And we do, in some respects, benefit from China Plus One strategy. Certainly a lot of the investment that we have seen in the last 2 or 3 years from South Korea and from Japan in particular has been where manufacturers who would have been in China or who perhaps are in China are looking at that and moving towards a Vietnam option, either as an alternate or in addition to China. That's supported because we have generally a lower cost base, we have a similar work ethic, and we actually have access to the hundreds of millions of people that make up the ASEAN markets. And through the formation and the start of the ASEAN Economic Community, we're going to see continued intra-regional trade opportunities. So, if I summarise the macroeconomic story, and this is why Vietnam is really so exciting for us and for our clients. We have a very, very strong demographic story, 95 million people, many of whom are in their prime income earning years, who are earning more and who want to spend more. We've got that coupled with Vietnam becoming an increasingly important part of global and regional trade opportunities. We've worked on 3 transactions in the last 4 months, where there have been European investors investing into Vietnam assets with a view to using them as a platform not only to serve the domestic market opportunity, but to serve the ASEAN opportunity as well. So we're in a good place domestically, we're in a good place from an international trade perspective, and also we're in a stable setting macroeconomically and particularly politically, which again, I haven't mentioned, but the political stability in Vietnam over the last 20 years really has been something that has served us very well in a world where we have constant turmoil and we have constant change. Stability from an investor point of view, supported by strong growth, is a very good thing to have. So let me talk a little bit about what sectors may be of particular interest to you as investors, where we're seeing activity and why we're seeing that activity. And I should be able to move through some of this relatively quickly because it does flow from the macroeconomic story. So the sectors where we're seeing activity are based around where the growth has been and where the growth is coming from. What are we seeing in the M&A market? And I often find it difficult to talk about M&A because so many people have a definition of what M&A is. We do have over 600 listed companies on the Ho Chi Minh City and the Hanoi Stock Exchanges. It's arguable that significant transactions in the public capital markets fall into a definition of M&A. We have significant international investors investing in the equitisation program of Vietnam. That's arguably part of M&A. There is also obviously significant offshore activity where businesses have a significant part of their operations based in Vietnam. So it really is a little bit hard to get an absolute handle on what we're seeing in the M&A market. But as the chart on page 14 shows, and it shows obviously some degree of volatility there, but it shows that we are on an upwards projection, that we are seeing continued growth in deal numbers and in deal sizes. And I think one of the big things in the M&A market over the last perhaps 2 or 3 or 4 years has been that we do now see a number of, not large by global standards, but larger transactions by Vietnam standards. Years ago, we would not have seen transactions in excess of 50 or 100 million. Now we are seeing significant numbers of transactions where the ticket size is well over 100 million. And in fact, some of the transactions that are being considered at the moment, particularly in the state sector, could be transactions that are in excess of $1 or $2 billion. So it's a very, very positive market. We expect to see continued activity. The next slide is just a breakdown over the last 2 years and also over the last 10 years. And it's a little bit misleading because this is around deal volume. It's not necessarily equating very easily to deal value. But let me talk a little bit about some of these things. Financial services and banks and real estate, for instance. Again, the financial services opportunity is one that is built around the macro story. When people move towards the city, when they have higher incomes, they're looking at greater levels of financial intermediation. They're looking to access credit so they can purchase a car, purchase an apartment. So we've seen a lot of activity in the financial services market. Similarly, 20 years ago, there was no insurance market here. And again, a lot of the both general and life insurers have seen substantive growth over the years as people become more aware of the need insurance products and obviously have more things insuring than perhaps they once did. And I think one of the really exciting things around financial services is that we have a very strong underlying opportunity in financial services. And if we look at some of the opportunities around digital banking, around how certain countries and certain investors are helping people access financial services in other markets, there's a great opportunity here because Vietnam is still absolutely underbanked. There are still many, many people who don't have access to financial services. And interestingly, from a digital point of view, while Vietnam has a population of 25 million, there are in the region of 150 million mobile devices in the country. So on average, the average Vietnamese person has 1.5 mobile phones, and that's a great opportunity for digital. The other areas where we see some opportunities, clearly consumer staples, packaged foods, processed meats. And again, we've seen a lot of activity in this area, and it's not just around people buying more of those products. It's about people wanting better quality in those products. It's about people who used to go to the wet market to do their shopping fresh every day, who are now changing their lifestyle. They're now going to a supermarket on a weekly basis. They've got a car to transport goods from the supermarket, and they can therefore buy more at a time. They've got more space that they live in. They've got microwaves, they've got refrigerators. So the opportunities in packaged food has changed enormously. The quality of the packaging, the quality of the food itself. We're not just seeing increased volumes of spending on consumer goods, we're seeing increased quality and people who continue to trade up through the portfolio. You know, again, many years ago, I remember shampoo packets here were little sachets with just a couple of mil, because that was what people could afford at the time. Now you don't see those so much. People are now buying bottles of shampoo. They're buying hair care product. They're buying cosmetics products. So the consumers have moved through just having enough. They now want more, they want better, and they want a better range of options in the consumer area. The consumer discretionary, education, hospitality. You know, for those of you who do follow Vietnam, there's been some recent activity in the education sector at very attractive pricing, but supportable pricing, because there is a great opportunity in education. There is a great opportunity around hospitality. The central coast of Vietnam has attracted enormous interest in terms of resort development. The number of international flights that go directly into Da Nang now, charter flights from Korea, from Russia, from China, from Taiwan. They're building a new airport terminal in Da Nang. We will have the first truly international standard resort and casino development there. We have the APEC meetings in Vietnam with the headline meetings in November in Da Nang. So we're seeing a lot of activity in the hospitality and in the tourism area, and a lot around education as well. So, you know, that slide just highlights that if we understand what's driving the macro level, if we take a view that that's going to continue for a number of years, and if you look at a lot of the comparative data, our GDP per capita is still way below regional comparatives like Thailand and Indonesia. So there is absolutely no reason, from my perspective, that Vietnam can't, over the next 10 years, continue to grow simply to catch up with its regional peers. And in due course, if we continue to get our policies right, and if we continue to manage things properly, we can outgrow our regional peers. So I have a very strong view on the medium-term future. I won't go through the next slide in much detail. You will all get copies of these slides afterwards. It's really just showing some of the activity in recent times. But let me just pick out a couple of names on there, not because they're clients, not because I did the deals, although I did do some of them, but more because they are interesting. And the first one, Vietnam Airlines. You know, that's our national flag carrier. That is an iconic Vietnamese brand, and that was, you know, equitized by the government. The government said, we want to bring new capital into Vietnam Airlines. We, as a government, do not need to own 100% of that. And, you know, we have seen that the Japanese airlines have picked up a minority position in that, and will hopefully increase that stake. One a little bit further down relates to Warburg Pincus, and I'm not singling them out, but again, one of the things we have seen in the last 5 years is increasing activity from private equity investors, whether it's Warburg Pincus, KKR, TPG, or other investors of that ilk who, as many of you were aware, 10 years ago, they had their Hong Kong offices and they were investing in China. Many of the PE, the global and the big regional firms now have a significant presence, generally out of a Singapore headquarters, but they're looking to deploy capital in ASEAN. They're looking to deploy capital in Vietnam. And it was only a couple of days ago that KKR, for instance, announced a new $9 billion ASEAN-focused private equity fund. So when you have the world's smartest private equity investors investing in the region for growth, I think that's a very good sign for Vietnam. We also see, interestingly, a little bit further down that list, and I know I said retail, I'm now doing that, so forgive me, but the Central Group is a particularly interesting one because one of the things that we've really seen in the last 2 or 3 years is intra-regional investment. We used to see a lot coming out of Singapore, but it was multinational headquarters investing through Singapore, but we're now starting to see far more investment from Thailand in particular. The Thailand economy has perhaps been a little bit flat. The large Thai companies, people like Singer, people like the Central Group, have maxed out in the domestic market. They're looking at where they can invest and they feel comfortable within an ASEAN context. They feel comfortable because they're close, because it's understandable, and because it's similar to the growth stories that they themselves went through in their home markets. So just again, some positive noise coming out of those recent transactions if we look at the sort of people involved and what's going on. So what are we going to see? I think what we're going to see is some very exciting times around equitisation. And what we will hopefully see, and this has happened since we had our new government at the start of last year, a much greater push to equitise and to equitise the larger companies. Vietnam Airlines has been equitised. PV Oil is under an equitisation process at the moment. Sabeco and Habeco, the two big beer companies, will be equitised. Vina Taba, our national cigarette and tobacco business, will be equitised probably sometime late this year, first quarter next year. So the government is pushing ahead aggressively with the sell down of non-strategically important state sector assets. Now, that creates enormous opportunities because many of the state sector assets have, and this is generally accepted, been less efficient than they may have been. So it's an opportunity for new investors, new capital, new management to drive productivity changes, to drive increased efficiency, and to drive increased profits through those businesses. The government is encouraging increased foreign ownership, both in, and it says major and public companies. The government has released the rules a little bit around foreign ownership of public companies. There was previously a 49% cap on the ownership of listed companies. That has been changed. You can now, subject to certain approvals and agreement with the shareholders, increase the foreign ownership limit beyond 49%. And again, that should drive activity in the capital markets. It should drive increased liquidity, and that is all good for the underlying economy as well. We're going to continue to see Vietnam becoming an alternate manufacturing and business hub. One of the things Vietnam has suffered from a little bit is we haven't had historically heavy industry. We have our second oil refinery coming online as we speak. The Nissan refinery will be live. That's going to support the development in time of domestic petrochemical and plastics industries. That will again support Vietnam becoming a manufacturing hub for the region. What do we need to do? There's a couple of things that I think everybody needs to be aware of. We have to be prepared for a more integrated world. And I think, for some period, many Vietnamese companies, they had the objective of being number one in Vietnam. And while that's an admirable objective, being number one in Vietnam doesn't actually mean that much globally. And what we've really started to see in the last couple of years is the very best Vietnamese companies being prepared to play on a regional stage or to some extent on a global stage. We have companies like Vietnam, which is one of our largest public companies, one of the companies with the best reputations. They have acquired assets in Poland, in the United States, in New Zealand, and they are looking and saying, we don't want to just be a good dairy business in Vietnam. We want to be part of a wider world, and we're prepared to make the changes we need to make to compete on that basis. So let me move on over the next sort of 10 minutes or so before we move into the question and answer session. Let me talk a little bit about some of the important things to think about when you're looking at a transaction or getting a deal done in Vietnam. Now, these might change if you're looking to acquire a majority interest in a Vietnamese private company. It's a very different concept to acquiring a minority interest, and that's very different to relatively passive participation in the capital markets. But hopefully over the course of the next few minutes, you'll get a sense for some of the key themes around getting deals done. And there's really 6 headings I'm going to talk to points under. The first point relates to the transaction process. And frankly, on occasion, processes in Vietnam can be extended, they can be inefficient, they can stop and they can start, and that can be frustrating. And an example of this is, and it does relate to the state sector equitisation, the equitisation of Mobifone, which is our second largest telecoms company, was announced in 2008. And 9 years later, we're still looking for the opportunity to participate in the Mobifone equitisation. So there can be drawn out processes, you do have to stay the distance, and you do have to be patient. There's often quite poor preparation by target companies. Many Vietnamese businesses are not experienced in dealing with foreign investors. They're often founder-led, family-type companies, and they're not used to doing the type of structured planning that we might like to see. This is getting a little bit better, but there's often unrealistic pricing expectations. I won't say that's limited to Vietnam. I dare say everyone on this webinar has been on one side of the fence or the other, where it's either been a ridiculously cheap deal or a ridiculously expensive deal. So sometimes we judge pricing expectations from where we sit in a particular transaction. But I think one of the things that many of investors have found over the years in Vietnam is that there isn't generally, or as often as there could be, a rational basis for valuations. People may believe their business is worth a certain amount simply because that's what they think. We have a changing and an inconsistent regulatory landscape. Again, as an emerging economy, Vietnam has done an enormous amount over the last 20 years to develop a really good, well-functioning regulatory landscape, but it is changing. The application of regulations can be a little bit patchy at times. Often local authorities in Hanoi or Ho Chi Minh or Da Nang or Haiphong may have slightly different interpretations of the same rules. Often they're struggling to keep up with what investors are trying to do, and we do all try and stay one step ahead of our regulators where we can. We clearly need to stay inside the law, but we like to push the boundaries where we can, which is entirely appropriate. But we're also dealing with regulators who aren't quite sure where those boundaries are, and therefore that makes it challenging. So the whole transactional process, you need to come in with your eyes wide open that when you start a process and you have a view on what may happen over the course of the 6 or 9 or 12 months that you're expecting to be working on it, that can change quite considerably. Excuse me. The second area is around financial due diligence. And again, what we see is that there's often unreliable information provided by the target. there's inconsistent financial information, there's often poor visibility of historical earnings, management of working capital, reporting of working capital, holes in the balance sheets, holes in the income statement are not unheard of. And in fact, again, for those of you that have got experience here, you'll all be familiar with the phrase that we have two sets of books. It's something that in many markets is difficult to fathom, but there are a number of companies in Vietnam who do run different sets of books for different purposes, not specifically for improper purposes, but just for different reasons to report to different stakeholders. So as an investor coming into a business and trying to understand the historical performance to help you get a sense for what the future performance may be, that can be particularly challenging from a financial point of view. Tax and structural matters, there is a degree of non-compliance. I think it is generally accepted that many Vietnamese companies do not fully comply with all aspects of all tax laws. There are challenges around transfer pricing. There are challenges around related party transactions. There are often different tax incentives offered for different businesses. And even within a single business, it is not uncommon to have multiple tax rates because you might be given an incentive for an expansion project, and therefore you often have to allocate costs and allocate revenue to a higher tax or a lower tax component of your business. And also, we have seen this is an area that has changed. One of the reasons that the government introduced a value-added tax a number of years ago was because it did encourage people to participate in the tax system, not to opt out of the tax system. But there's still issues when we're diligencing businesses around the lack of legitimate supporting documents and how the tax authorities may approach that from a tax audit point of view. Commercial due diligence can be a real challenge. This is a very opaque market. I've alluded to the fact that understanding the financial position and the tax position of the company you're looking at can be challenging. It's equally challenging when you try and understand the overall performance of the market, when you try and understand competitor performance, when you try and size the market. It's very, 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 very challenging. Also, and this is a historical development, sales and distribution networks in Vietnam, which from a fast-moving or a consumer goods point of view are particularly important. Vietnam has some unbelievably complicated distribution networks that operate. Part of that is driven by geography, part of that is driven by infrastructure, part of that is driven by motorcycles, because when you do get down to the rural store, it's a very different sort of distribution model to what we might find in a modern trade environment in a big city. So understanding those commercial diligence requirements, sizing the market, competitive landscape, who's coming into the market, who's expanding. This is a very vibrant market, but it is one where there isn't perfect information, and that means you have to work very, very hard to understand and qualify the opportunity that your investment has in the market. Legal due diligence. I'm not a lawyer. KPMG does have a law firm here, and they work closely with me on deal issues. There is a lot of challenges around legal documentation. There is certainly significant use of nominees in Vietnam where people stand in for other people. That often makes it hard on occasion to even understand who the vendor, the true vendor of a target business may be. You may think you're talking to the shareholder, but you may well find that there are other parties that stand behind that shareholder that have a key interest in what's going on. Understanding the legal risk related to the target. Some of the Vietnamese land laws, some of the environmental laws, there are challenges around the changing regulatory environment. There are challenges around the enforceability of certain contractual requirements. There are challenges around how the judiciary responds to certain situations. So there's significant legal issues that need to be worked through. And then once you've sorted through the diligence and you've understood the target and you've understood the risks associated and you've priced the opportunities, then it's around the valuation. And this is where, again, it can become very, very challenging. Vietnamese business owners often don't understand the balance between risk and return. They may not necessarily understand how you're financing a transaction. They might look to sell the business now based on the value you will contribute in the future, but they expect to be paid for that now, even though you're going to do some of the work. And again, the sophistication of Vietnamese businesses, the use of quality advisory firms is changing, but quite often, if you're dealing with a state-owned enterprise process, there isn't great valuation models that sit behind the discussion. If you're dealing with a founder-led private sector business, often the founder has lived and worked in that business for 20, 25 years. He knows intrinsically what it's worth, but his ability to communicate that and to explain that and to negotiate around that can become very different. So, look, I've managed to keep that to the 40 minutes, which is what I'd planned to do. I've touched on why Vietnam, I've touched on the sectors, I've touched on some of the issues and some of the things that you need to think about when you're looking at a deal here, whether that's from the timing of the process or whether that's through to getting quality due diligence done. We've touched on some of those things, and I'd now like to perhaps throw the floor or perhaps throw the chat room more appropriately open to take some questions and answers.
I don't think we should throw floors or chat rooms. It sounds very dangerous. So it's now time for the question and answer session. Luckily, we have had some people submit questions before the webinar started, and then also we have some who submitted during the webinar. So we have about 7 questions in only about maybe 17, 18 minutes. So just so you know, whatever questions we receive, we will still directly answer your question by email if we didn't get to you today. So first question, Mr. John Ditty. Can you please share the difficulties of doing deals with state-owned enterprises?
Yeah, look, as I've alluded to, there are significant opportunities in the state sector. Some of our largest businesses area, some of the iconic brands are in that area. Big, large, cumbersome, often unproductive businesses that, certainly on occasion are overstaffed. So some of the additional challenges when we're dealing with state-owned enterprises, I think one of the key ones is ensuring that there's alignment on the strategy and the future direction. Businesses that have traditionally operated and been managed within the state sector have not been driven by shareholder returns. They've been driven often by policy decisions and by ensuring that their mission in life is to serve the needs of the state. That doesn't necessarily equate to return on investment. So, it's really essential that you spend time with management, with the government, with the relevant ministry, making sure that where they want the business to go aligns with where you want the business to go. I touched on transparency earlier. I think it's a fair comment that often the process involved in equitisation is less transparent than it is in others. Sometimes the timeline is excessively short. Sometimes there's unusual delays that nobody expects. So getting a handle on the process is difficult. Quite often the target company or the relevant ministry is less willing to allow full access for due diligence. I've been involved in situations where you are allowed maybe 1 week or 2 weeks, and for a large state-owned company that often has inconsistent information, it's challenging to get through the work there. Many state-owned enterprises have unique and specific accounting policies. They can get special permission from the Ministry of Finance. They can occasionally get permissions from the State Bank to not, and let me make this clear, they're not breaking accounting rules, they're having special accounting rules that they are allowed to follow. And we need to understand all the special rules. Often they have special tax incentives, they have special employment arrangements, So state-owned enterprises can sometimes not be regulated the same way.
Sorry about that, guys. We had a little slip up with our internet connection.
Yeah, thanks, Van. So yeah, look, state-owned enterprises bring their own unique challenges. But again, if you do the homework and you get the understanding of, to the extent you can, there's certainly some great opportunities in the state sector.
Next question. We have a question from Tom Bovers. The question is, what is more common, completely onshore Vietnam deal finalization or completely offshore Vietnam transactions or some combination?
Yeah, interesting question. Thank you, Tom. Look, if you are a foreign investor and you're selling an interest in a Vietnamese company, you may, and it doesn't always apply, you may have the option of transacting at a Vietnam level or at an offshore level. On the surface, and if a special purpose vehicle has been used to hold the investment, it may be easier and simpler to transact offshore, but realistically, this is always a matter for negotiation between the parties. It may depend on how the transaction is being financed, and on occasion, financing an offshore transaction where the underlying assets are in Vietnam may be a little bit more challenging. It may depend on what messages and communication the parties want to communicate to their stakeholders and to the market. Does the buyer want to say they are investing in Vietnam, or does the buyer want to say they are investing in a Cayman Islands company that owns a subsidiary in Vietnam? So often the messaging can be important. In my experience, I think it's certainly unusual for a transaction to be done part onshore, part offshore, and it would generally be either one or the other, but it's very specific to each particular transaction and to the negotiating roles of the parties involved.
Next question from Mr. Tan. What is the best practice to approach a potential target? How should we evaluate an ongoing business, normal growth, without a common knowledge or experience of their industry?
Yeah, look, that's really interesting because there isn't a lot of available information in the market. In terms of how to approach a potential target, look, there is no single best approach. There is no cookie cutter approach. There is what is appropriate and what positions you to move forward on an opportunity. The approach may depend on your existing relationship with or knowledge of the target. It may depend on the perceived interest by other parties in the target. It may depend on whether the target has appointed advisors, and if so, who they are, or it could depend on your timeline and a range of other factors. So, Vietnam is generally a relationship-driven market. People like to know who they're doing a deal with. So, often the initial approach to a target company can start months, on some occasions years, before you get to consummating an actual transaction. In terms of how do you evaluate a business without knowledge of the industry, look, honestly, you need to do a lot of research as part of your investment assessment process. The performance of every company, and it doesn't matter what sector it is, how mature the company is, it's impacted by the competitive landscape. It's impacted by the regulatory landscape. It's impacted by the pace of change in that industry. It's impacted by the potential for disruption and by the target's position within that industry. So it's essential that if you're assessing a target, you need to understand not just that business, but where that business stands vis-a-vis the market and vis-a-vis the target. And we all read and talk about disruptive market disruptors all the time, but if you look at, again, and it's happened here as it has elsewhere, if you look at what Uber and Grab have done to the Honda market in Vietnam, if you look at what they've done to the taxi market, if you were looking at our major taxi companies, Mei Lin or Venus Sun, if you were looking at those 3 or 4 years ago and you weren't aware of the potential for disruption by new market participants or by new technologies, you'd develop a very different view of that opportunity. There is plenty of readily available research and analyst reports. There's more and more people writing about Vietnam. So developing some thinking on the sector in the near to mid-term outlook should generally be possible.
So we have 2 questions sort of related. I'll ask them, I think, at the same time. Mr. Home and Mr. Marson. Mr. Home asked, the capital into the Vietnam economy is mainly injected from the banking system. The role of stock exchange is quite small and not material at the moment. So one of the big issues in Vietnam now is a lack of long-term capital. What implications does that issue have on doing deals? And then likewise, Marcin Krowski asks, what's the future of stock exchange in Vietnam? Seems dead, lacks liquidity and transparency.
Yeah, look, it is certainly, I think, a point of frustration for many investors that the capital markets have not blossomed as we all expected. I was fortunate enough, lucky enough, historically enough to sign the first ever audit report on the first ever listed company in Vietnam.
Whoa.
And that just shows how long I've been here. And I remember when RE was the first listed company in Vietnam, that the feeling was this is a great opportunity for capital markets. I think it's probably fair to say that we've had ups and downs. Certainly the index has gone up and down and up again. But we do have 600 and something listed companies across Hanoi and Ho Chi Minh City. But the vast majority of those companies that have gone to the public markets have not sold a significant amount of capital, and it's not generally been to raise new capital. It's existing owners selling down a little bit and people taking a view on whether there's upside in that. There is significant wealth being created with 20, 30, 40-year-olds. I think the government needs to find a way to encourage that capital into capital markets at a domestic level. I think there's been significant amounts of capital go into the real estate markets over the last several years. For obvious reasons, it's been a pretty attractive market to be in. But we need to create an environment where that money gets deployed to the capital markets. I think that requires continued transparency. It requires better governance. It requires people to truly develop confidence that capital markets are where they can put their children's school funds, and that's probably not the case at the moment. And certainly I think from a foreign capital point of view, there are concerns around currencies, there are concerns around foreign caps, but the reality is that the vast majority of companies that are listed are still very, very small. There is only a handful of large, internationally attractive companies, and in those companies like Vina Milk as an example, we're right up to the foreign limit and people are not sellers. So, Marcin and Hung, I sympathise that we do struggle with our capital markets. I think there is opportunities there. Certainly we've seen growth in them, but it's a long way short of what we truly need to support, really, really sustainable domestic growth.
So I think we only have time for one more question. So the last question will be from Mr. Home, which is that Vietnam is pushing the state-owned enterprise equitization process to enhance liquidity and address national budget issues. How will this process impact equity evaluation of Vietnam market from offshore investor perspective? And let me just say one more time, if you didn't get your question answered, don't worry, we'll follow up with you after the session. And thank you also for submitting all your questions.
Okay, yeah, look, the equitisation process, I've talked about it freeing up and making assets more productive. I think the reality is, and this is a very important reality, the government does need capital inflows. The government has enormous pulls on its budget. We've got a lot of investment to do in hard infrastructure. There's a lot of investment required in social infrastructure. And when you have an economy growing at 6% a year for many, many years, the government has to spend to make sure it keeps up with that. So, the SOE equitisation process will certainly address some limited budgetary issues. What will it do from a capital markets point of view? Look, you have businesses like Sabaco, which currently has a market cap of, $2.5, $3 billion, depending on which day of the week it may be. That is a very appealing company. It's a big business. It's the leading brewer in one of the highest performing beer markets. So I think, as some of these big state-owned enterprises are equitised, they're visible names, they're visible brands, and I think they are appealing to large strategic international investors. So, and this is where the equitisation process was a little bit misleading to start with. The government sold off companies, but if it was selling off machinery company number 6 and the total market cap of that was $200,000, it really didn't make much of an impact. It was a story, it was another listed company, but it didn't impact the markets. I think what we're going to see is, as we push ahead with the bigger equitisations, a pretty big shift in the perception of the capital markets in Vietnam. That does, of course, require the state to commit to selling down those assets. Again, as those of you who are close to the market will know, when Airports Corporation of Vietnam privatised, there was 3% went into the public hands. When Vietnam Airlines privatised, it was a very small percentage. So what we're seeing is the headlines around the SOE equitisation, but the government is still not fully selling down its major positions in many of the organisations.
We have time for one more, to squeeze in one more question. We have a question about education sector, real estate, or tech. Take your pick, John.
Education.
Okay, the question from Ms. Holm is, what are the different considerations in acquiring an education organization where mostly assets are intangible?
Yeah, look, education's been a really interesting sector over the last 12 months in particular. VAS has been transacted. ILA, which is a language school, has been or is in the process of being transacted. There's a lot of activity in that area. And, I think what people are looking at is, what is the ability of that school, through its quality of teachers, through its brand reputation, through its health and safety, through its facilities, to really build that into a platform. And, a lot of the schools are on leased buildings, but it's not the leases or the buildings that are important, it's the quality of the education. And I think, there's the perception that there is a significant opportunity in perhaps the mid-market Vietnamese language international school. There is a pretty thin market for full international schools, and they are, for the average Vietnamese person, still relatively expensive. And there is a sense that the public school system is perhaps overcrowded and not serving the needs as best it could. So it's that opportunity to have kids go through the Vietnamese curriculum, to study the national curriculum, to do it at a reasonable price, but to layer in a level of not just English language, but English language education, because that opens up overseas university opportunities. It opens up much greater opportunities for people's children. So, I think the reason that people are investing in the sector is because they believe Vietnamese people will invest in their children's future. I think it's a cultural habit that we would all appreciate. Many of us are Vietnamese. Many of us have been sent overseas, perhaps by our parents, or we know that our parents have worked very hard to get us into one of the better schools, to get us the extra education on the weekend, to send us to learn English, because it's all about creating a better future for the next generation. And I think culturally, although Vietnam has changed over the years, that is still a very, very strong concept within Asia.
Thanks, John. So that's all the time we have today for our webinar. I think it's clear that this is a complex area for investors in Vietnam, and we cannot possibly cover all the aspects of the issue in under an hour. On behalf of John, let me remind you that KPMG Vietnam has a track record of navigating these areas of business. Please contact us if you would like any advice on market entry or expansion of your business in Vietnam. Our next webinar, as you can see, in the Investing in Vietnam series will take place on Thursday, June 22nd at 10 a.m. Vietnam time, and we'll cover the topic transfer pricing regulations in Vietnam. After I close this presentation, we will have a survey. We would appreciate that to know what you thought of our webinar today. Please help us by responding to the survey before exiting the event. Tomorrow morning, don't worry, I will send out a follow-up email that will include a link to the recording, just in case you missed any parts, our informative slide deck, and information on how to contact us. On behalf of our esteemed speaker, John Ditty, as well as the team at KPMG Vietnam, thank you for joining us, and have a great rest of your day.
Thank you all very much. Goodbye.